Bob, good to have you on. I'm going to ask you a question here about, and I realize stocks are down today, better than 1%, but in general, what we've seen in recent weeks, this game of chicken now between stocks and bonds, who historically tends to be right?
The bond market. It often leads the stock market, and it's moving up in yield, which is not great news for stocks. And I think you add to it, the interest rate affects the PE, and of course the E is earnings, and earnings estimates are coming down. So feels like we're a bit ahead of ourselves in this equity market.
So so it more likely to go lower before we go higher. I guess, how do you see this playing out to the year end?
Yeah, I think we're going to frustrate both the bulls and the bears this year and have a flattish sort of year. So far this year, we've obviously frustrated the bears. Maybe we'll have a chance now to frustrate the bulls. I don't think we're going much of anywhere. Inflation is still way above what the Fed would like it to be. Earnings estimates are coming down. Yield curve still inverted. Leading economic indicators have rolled over. Sentiment has moved way up. A lot of bullishness out there. So I think we need a pause here, Morgan.
So what's an investor to do with their money?
Yeah, buying a 10-year treasury at 386 is probably not a bad idea. Target end of the year for us on the 10-year is 360, so I can make a little money there. If you're uncertain, like many of us are, it's a very confusing time. A 450 2 years, not all that bad either. There seems to be some talk in the last couple of days that maybe we're going to get some pops and volatility here in the coming weeks or coming months. Do you expect that as well? And what are the ramifications of that, given the current environment and the fact that there really are more questions than answers? You hit it on the last part of that question, more questions than answers. Look, it's always uncertain and confusing, but I think it's extra uncertain and confusing. You've got this sentiment that says, well, maybe the Fed's almost done, inflation's coming down, maybe they'll be lowering rates by the end of this year, maybe we'll have a soft landing. But you got equally strong voices, and I lean on this side to say that inverted yield curve, the rolling over the leading economic indicators, declining money supply, that all tells me, and earnings estimates continue to come down. Fourth quarter earnings reported here in the first quarter have not been great relative to expectations. So I think we have more air to let out of the balloon, and I think that that pause that refreshes, meaning some decline in equities, probably makes sense here, Morgan.